What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock, what you should be looking after for the future, and what on earth happened today as the market was absolutely crazy. This, in my opinion, was the craziest day I've ever seen in the history of the markets. If you actually look at SPY, this was something you've never seen before. I'm going to break down why on earth it was so crazy, what the data is showing for Tesla, what should be playing out for the future, why tomorrow is going to be very key, and what on earth is going on with CPI. Now, before I break anything down about all the data and Tesla's share price and what could end up playing out for the future, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is any of these 12 free stocks could be a free Tesla share, a free NEO share, or a mix of all of them. It's a limited time offer that ends in just 2 days. Check it out before they run out. With that out of the way, let's get on with the video. So looking at Tesla, we're up 2.06% for the day. However, for the overall market, this was a crazy day. I'm going to break down exactly why. So when the market opened and we had this crazy gap down that happened and the market looked like it was about to crash. And we did actually crash in the very beginning. SPY started off. We closed yesterday at 356. Then we opened up all the way down to about like 350. We crashed to about 348. So we were down like $8 for the day. Huge drop in SPY, down like 2%, almost 3% for the day. And it was not looking good because CPI was pretty bad in my honest opinion. But then out of nowhere, we saw a lot of buyers, big money started to step in. They started buying like crazy. They started buying Microsoft and Apple to start us off. The market started pushing up because of that. We came down a bit, showed some weakness. Then what happened was more buyers came in again and again and again. We saw kind of like a mini squeeze like move in the markets, and we started to see more and more FOMO kind of like come in. We started to see maybe like a mini squeeze, some margin calls, a lot of things all together, and big money came in pushing the market up very, very hard. We went from being down almost 3% to going up almost 3% in one day on the SPY. I've never seen that in one day. I mean, that's pretty crazy for that to happen that quickly. And as a result of the SPY and the overall market pushing up, Tesla ended up pushing up too. And Tesla was kind of late to this. Tesla ended up pushing up a little bit later, but it took some time for Tesla to turn green. We got the green and we actually closed above 220, which is a pretty good sign. Now, what I want to do in this video though is start off with the real data first, and then I'm going to transition into what this means. So CPI came out, all right? Let's just quickly go over this. 8.2% is what the number was. And that was pretty bad in my opinion because the expectation was 8.1%. Now, core CPI came out at 6.6%. Once again, very bad, horrible numbers, guys, overall. If you look at all the data, we could see basically everything went up except for energy. Energy is the thing that brought CPI down from the monthly basis. But overall, guys, it still is not looking that good, in my opinion, from an economic standpoint. Now, if you look at the data, let me look at this chart first. If you look at the 1 month percentage change for CPI, you will notice overall a big increase actually happened between September and August. And that is once again not the best of signs, incentivizing a more hawkish Fed. However, when you look at the data like this, the blue line represents all items, and you will notice there's been a decrease in the all items CPI. However, this is actually inflated by the gas prices, the energy prices going down. Now, energy prices actually went up this month in like October. So this data is going to change, in my opinion, in the future. But for the months of like, July, August, and September, they were going down, and that's why this is downtrending. But if you look at core CPI, the purple line right here, this means you exclude food and energy, which are two things the Fed can't control. It was going up and up and up again. Once again, 6.6% is horrible for core CPI. Everything is still going up in value. That's not good for the markets. It's not good for what the Fed has to do. And it's just not good whatsoever. The market was not happy about this overall. However, something still changed despite that. I'm going to talk about that in a second. Now, if you look at historical data, all right, January CPI wasn't that bad. The market pushed up. But then if we go back from there, Every single CPI report was pretty bad. Every single one except for August. I remember August was like the start of a sign of reversal. You will notice that we were red every single time when the CPI was bad. And September in particular was almost identical to what we saw this time because the overall all items CPI was on a downtrend, but it actually went up between September and August. However, core CPI was going up very hard, right? And it got even worse in September. And theoretically, the market, if we were following this trend, we've been following this for the entire year, we should have had a big down day today. And that's what a lot of investors were basically pricing in, getting ready for. Because when inflation is too high, this incentivizes the Fed to be more hawkish. Now there are lots of cases being made for the Fed to raise the federal funds rate by 75 basis points again in November. So some people have argued that this is a little bit too hawkish. I believe Elon Musk and Kathy would have both actually stated this too. And seeing this potentially happening, right, it is forcing Jerome Powell to be even more strict on these policies, which is not the best for the markets in the future. But for the short term, you have to remember there's another factor that affects the markets, and it's sometimes very illogical. Sometimes does not follow the same logic we are following, and that is how the market makers manipulate this market. How big money also plays a big role in it when you least expect it. So this was their plan. They realized everyone was thinking, okay, given the historical data, CPI should have caused the market to crash. People were prepared for that. People were buying puts. And what happened was smart money destroyed so many people. They knew that this was their chance to trick everyone, and they ended up pushing the market up on bad news. Once again, it's just very, very crazy. What else is very interesting to me is I noticed one similar trend, at least as of recent. You will see we had a very interesting trend where we pushed up into CPI back in September when it came out. Then that led to the big crash that happened. And then during this CPI, we've been just dropping and dropping and dropping. And now we're starting to show signs of an uptrend and hopefully a continuation from here. Now, if we are truly going to be respecting an uptrend, this is going to actually remind me of something. I was showing you guys this a couple of weeks ago. This is what the market tends to do during these midterm elections. Because remember, midterms are just a couple of weeks away. Now, what happens historically during midterm elections is the market has a big drop. Let's actually go a little bit more back. June comes. As we approach June, we get a big drop followed by a bounce, some choppy price action. That's very similar to what happened in our markets. Now, as we approach the month of August, we have a bit of a drop followed by a big push to the upside near the end of August. Once again, very similar to what we saw. A big crash in September, which is what we saw again, followed by some consolidation in October and a big push as we approach mid October, approaching the November elections. That is once again what we saw. So, very big similarities between these two. Now, I'm not saying the market's going to just go on and straight up recover from this point on, because there is some more potential for downside in the future, still, in my opinion. But from this point on, if you look at I would say from November and back, it's very similar to what we've been seeing, and there are a lot of signs of a potential rally to come for as we approach the midterms in November. So that could be very, very evident. But in order for us to see that, we have to see confirmation first. Looking at Tesla, what the data is showing us, the price comparison between Tesla and SPY is very imminent. The price price ratio was coming down as Tesla was showing a lot of weakness over the last couple of days. However, there is some potential for this to actually flip in the opposite direction if Tesla does start to outperform the SPY again. And that is very possible when Tesla starts to see lots of bullish price action, maybe a squeeze like move if we are really ready for a rally. Now, there are lots of buy signals for Tesla. Morgan Stanley is giving it too. I want to actually come down here, because when you look at the short interest on Tesla, it is crazy high. We saw lots of shorting on Tesla. There's a possibility that if the market's going to rally, maybe Tesla could get a bit of a squeeze in there. Maybe some shorts could start to cover. No, I'm not saying it's going to take Tesla to all-time highs or some sort of massive short squeeze like that, but we could get a mini one. It still is very much possible. What I'm liking about Tesla is the volume. 91 million in volume. That's pretty good volume for a push to the upside. If we maintain better volume and we keep on seeing the market kind of push like this, that could be a very good sign. The short volume percentage is anticipated to start coming down for Tesla if we keep continuing like this, showing that the bulls are gaining the edge on this stock if we see this trend continue. Now, what does this all mean for the future? All right. if you look at SPY, let me show you something very interesting. The SPY, the NASDAQ, the QQQ, they all have something in common. That is a big gap that's not that far away. So what I'm starting to see is, okay, on the daily, we have this crazy looking candle. And it looks, really bullish. If you look at this, it's super, super bullish looking. If we get a continuation of volume, we see the bulls continuing to come in out of nowhere, trap the bears, and cause a big, like a bit of a rally. What I'm going to be anticipating is a continuation of this. If SPY breaks above 370, if we could actually do that, we have the potential to fill this gap at about 373 and maybe go even higher to about 380. It's very possible if we get enough volume. And in this crazy market, I wouldn't rule it out. Now, if that's the case, the QQQ, same thing. It can also push up. We got to get a break above 275 first, get a break above that, and this thing has potential to actually push to 280. The NASDAQ, very similar story, but I want to now focus on Tesla. What's going on with Tesla's share price? Well, Tesla's starting to push up. We're actually not as high as some other stocks would be from a relative point index because Tesla's bottom was just barely touched at 206. What I'm trying to see is Tesla has this big gap up here at about 237. All right. For Tesla to get to 237, I want to see this thing get lots of volume and break past 230. For us to break past 230, we have to get past 226. Very key resistance. This was holding Tesla back over the last couple of days. If Tesla can get a nice break above 226, we have the potential, in my opinion, to retest 230, which we can quite easily break, in my opinion. A hold above 230, in my opinion, seeing good volume would be a very bullish signal, and Tesla has the potential to go all the way up to 237 or maybe even 240 pretty quickly from there. But we got to see the volume continue to go up. We got to see buyers continuing to step in, and that's why tomorrow is going to be a very key day to see how this thing ends up reacting, because it is still very possible in this very manipulated market for us to get that midterm rally despite everything going on in our economy. Because remember, the stock market and the economy are not the same thing. Could the economy influence the stock market? Yes, it really can, but they're not identical, and it's very important to recognize this. So for Tesla, if this truly was the bottom, this 206 level, and if you actually zoom out of the chart a bit, I noticed something else that's very interesting. I think on the 1 hour you could see it. This is kind of looking like a Wyckoff accumulation schematic. This looks like a spring right here. That would be very interesting if that's actually the case. So with that said, we could be entering the end phases of it. So it is very possible to see Tesla get a nice push up from there. So what am I predicting for tomorrow? Well, we have to watch key levels. All right. Tesla has been showing some signs of volatility between 215 and 220. We've been holding up all right around there. And the last time we touched 206, Tesla did end up seeing a big rally in the past. So hopefully we can get a repeat of that. But we need confirmation first. If Tesla gets a nice break above 226, I'm hoping we see that tomorrow. If we do that, this thing will most likely end up filling this gap all the way up here if the volume continues, which I believe it will. So I'm a lot more bullish than bearish, and I do believe we have to watch these key zones first. So I wouldn't be surprised if Tesla ends up trading at 226 to 230 tomorrow. Very possible if we continue to push up. Now, if this whole thing is a trap, all right, Tesla has support at 220, 215, and then 211 to 210, followed by 206. Now, I don't really think Tesla's going to come down from here. I don't really anticipate it. I think we're more likely to push up. The market looks like it really wants to go as things are very oversold. If you're looking on the daily on Tesla, all right, I know this is kind of messy. The last time Tesla touched 206, it was a long time ago, back in May to June. During that time in May, Tesla came down to 206, got a huge bounce off that and pushed all the way up to about 260 in a very short period of time. Now, I'm not saying this is going to happen exactly the same again, but you could see this is a very critical level which Tesla just touched. So there is potential for us to push up a little bit more from there. And that's why I am a lot more bullish than bearish for tomorrow. So for tomorrow, watch support and resistance levels. Pay attention to your technical indicators very carefully. Watch the volume and everything else that's out there. And the key zone to really be watching for is 226 to 230. A break above 230 gives this thing potential to fill the gap at 237. Very, very possible. And that is what I'm anticipating over the next couple of trading days. Thank you all so much for listening. Remember, sometimes you can't always predict the market perfectly, so be prepared for anything, all right? Watch both support and resistance levels. Be prepared for either downside or upside, but I do believe upside is a lot more likely considering the volume that we are seeing and the way the sentiment is starting to shift in this market. Thank you. Have a great day, and I'll see you guys in the next video. Tesla to the moon because the long-term future is still incredibly bright, and peace out.